you ever wondered why a market suddenly breaks out after moving sideways for a long time? Or why an asset reaches the top, moves sideways, and then suddenly starts falling? The answer can often be found in two important market phases: accumulation and distribution. In this video, we're going to understand both concepts, how to identify them on a chart, what they tell us about buyers and sellers, and how traders can use them without trying to predict the market. Hey traders, welcome back. Today we're going to talk about two important concepts in price action: accumulation and distribution. Think of them as two opposite phases. Accumulation generally happens near the bottom after a decline, when selling pressure starts weakening and buyers may begin absorbing supply. Distribution generally happens near the top after an uptrend, when buying momentum starts weakening and existing holders may begin selling into demand. But remember, neither accumulation nor distribution is an automatic buy or sell signal. We still need confirmation. Let's understand both step by step. What is accumulation? Accumulation means that a particular asset is being gradually accumulated or bought. Imagine an asset has been falling for a long time. Eventually, price reaches an important support area. But instead of continuing to fall aggressively, something changes. The market starts moving sideways. We see multiple small bodied or neutral candles. Attempts to push the price lower don't produce strong follow through. This can indicate that selling pressure is weakening and supply is being absorbed by buyers. There are several things we can look for. Number one, a previous downtrend. Usually, accumulation becomes more meaningful when it appears after a significant decline. Price has already moved down and reaches a major support or demand area. Number two, sideways price action. Instead of continuing lower, price starts consolidating. The market moves within a relatively defined range. Number three, multiple neutral or small candles. Inside this range, you'll often see several small or neutral candles. This shows that the aggressive selling that created the previous downtrend is losing strength. Number four, no major follow through on the downside. This is extremely important. Sellers may attempt to push price lower, but price doesn't continue falling aggressively. The market keeps returning to the same range. This can be a sign that supply is being absorbed. But here's where traders often make a mistake. They see price at the bottom and immediately buy. That's not the approach I recommend. Instead, wait for confirmation. A potential confirmation can come when price breaks above the accumulation range, especially when the breakout is supported by strong price action and increasing volume. So the basic structure becomes downtrend to accumulation to breakout to potential uptrend. Remember, accumulation itself doesn't guarantee that price will go up. The breakout and follow through give us additional information. Part 2: Distribution. What is distribution? Now let's look at the opposite situation. Distribution. Distribution means that an asset is being distributed or sold. In simple terms, existing holders or larger participants may be gradually getting out of their positions. This generally becomes important near the top of an established uptrend. Price has already moved significantly higher. Then it reaches a major resistance area. Instead of continuing strongly upward, price begins moving sideways. How to identify distribution? There are several clues to watch. Number one, a previous uptrend distribution is generally more meaningful after a strong upward move. Price has already made higher highs and higher lows. Then momentum starts slowing down. Number two, sideways action. Near resistance, price begins consolidating near the top. It repeatedly moves between resistance and support instead of continuing higher. Number three, multiple neutral or small candles. Just like accumulation, we can see many small or neutral candles, but this time they're appearing near the top of the market. Number 4, no major follow through on the upside. This is one of the biggest clues. Price attempts to move higher, but there isn't enough buying pressure to produce strong continuation. The market repeatedly struggles around resistance. This can indicate that buying momentum is weakening. Again, don't immediately short just because price is at resistance. We wait for confirmation. One potential confirmation is a breakdown below the distribution range. If price breaks below support with a strong bearish candle and volume increases, that can provide stronger evidence that the market is transitioning into a downtrend. The basic structure becomes uptrend to distribution to breakdown to potential downtrend. If you found this video useful, make sure to like the video and subscribe for more trading education.